Hey guys, good morning and welcome to the Camp Financial Stock Market Update for July 18th. Let's go ahead and jump right into it here. So the Dow Jones, the NASDAQ, I believe the NASDAQ, actually I'm not positive on the NASDAQ, but Dow Jones and S&P 500 both hitting new highs again yesterday. The stock market did what it's been doing a lot of lately, going up. Not that it went up much. I mean, the Dow was up about 1/10%. S&P is about 1/4%. But when they're heading in that direction, and the Fed's pumping money in, both sayings kind of come true at the same time. Don't fight the Fed, and don't fight the trend. So with that said, let's take a look at who did really well. Looks like I see a lot of bright green in the basic material sector yesterday. Let's see the pipeline companies, Kinder Morgan, and let's see who's the other one here, WMB, Williams. Kinder Morgan and Williams companies both performed 3.5%, and Williams companies was up 4.8%. The biotechs, we're about flat, it looks like. Home improvement stores are both up. Google and Facebook both up pretty good yesterday. Bank of America on their earnings beat, though interesting that they admitted, that the low rate environment is impacting their ability to make money. All the money that they've made has been in the bond market trading, so they were still able to beat earnings, though, even with not being able to generate the income that they wanted from from their standard business. So with that, let's pull up the indexes here. We're going to try and do this pretty quick today. We're trying to keep this under 10 minutes this morning. So we've got the S&P 500 up. Worst performers in the S&P 500 yesterday: Hasbro, J.B. Hunt, Monster Beverage, Perrigo, and Diamond Offshore Drilling. I'll take a look at Hasbro. My guess is they must have released earnings, because they got walloped pretty good. Yeah, Hasbro reports slowing growth in the boys division. Came out yesterday in the Wall Street Journal at about noon. Let's see, there's their Hasbro's Q2 earnings and revenues beat estimates, so they actually did beat, it looks like. But as is pretty common, even if you beat on earnings, if you project a downtrend, or you project something negative in your conference call, if you're talking about that you think you're going to see things slow down, even with an earnings beat, that's not going to help your it's not going to help your stock any. And Hasbro definitely took a pretty big lump yesterday, down 6.6%. So just because you beat earnings does not guarantee that you're going to get a pop. So I want to take a look at Monster Beverage as well. They were the third lowest yesterday. And it looks like we're kind of seeing the same thing there. They were downgraded by Wells Fargo yesterday on their sales expectations, and then the report says that they may show Q2 weakness when they report, which will be pretty soon. But yeah, in the bottom 20, there's kind of every industry, it looks like. Let's take a look at the top 20 and see if there's a group in there. I mean, oil did pretty well yesterday. Like some of the oil companies, looks like about 4 or 5 of them in the top 20. Top 5 here were Williams Companies and Kinder Morgan, which 2 that we already talked about. Seagate Technologies was the 3rd best day. Wynn Resorts, 2nd best day, and Chesapeake Energy was 4th. Those were up between 3.4 and 4.82%. Let's take a look here at Williams Company. They've been in a pretty good uptrend since February. Back in February, they hit lows right around $10, and they're trading at almost $25. So, since early part of February, you could have, if you got in, you're up about 150% in what, 5 months? Heck, even if you just got in right at the beginning of July, you'd have got in right around $20 and it's trading at almost 25. So that's 25% right there in half a month. So there is the ability to make some big profits in the S&P 500. I mean, people think they're the 500 biggest companies. They're not going to be very volatile. There's not going to be the ability to, catch big earning trends. I need to play in smaller fields than that. I need to work with smaller companies than that. No, that's not true. I mean, like I said, 5 months you made 150% on this company if you've been in it since it dropped down to $10. So there's definitely the ability to make money with stocks that are in the S&P 500. So I'm trying to see if I don't see any earnings information here. Let me take a look. Looks like they may have got an upgrade. Yeah, so let's move on here. Okay, now let's pop over. Oh, and just outside the top 5 was Bank of America. Like I said, they beat on earnings. The biggest thing for them, they're just gonna, once interest rates start to go up, that's when the banks will start to make more money, and that's when it'll be a good time. Right now is probably a good time to start finding baseline. Some of these banks that are right on the bottom have been bouncing along the bottom and looking for them to shoot up once everything levels out for them and interest rates start to take off. So take a look at the bottom 5 in the Dow, from minus 0.35 to minus 1.06%. Worst performer yesterday was Travelers. Merck 2nd, Chevron 3rd, United Health Group 4th, and Pfizer 5th. Take a look at Travelers real quick, see if there's anything came out. Not really anything yesterday. Nothing really new in Travelers. So looks just to be part of the trade yesterday. What happened yesterday. Oops. And we're back to the S&P. Let me kick it back to the Dow. For some reason it clicked off. So we had 13 that were down, 1 that was neutral, and 16 that were up. So again, the Dow still more advancers than decliners, and that's a good sign for the market to continue to rally off of. And let's look at the top performers: DuPont, Home Depot, Apple, Goldman Sachs, and Boeing. So Goldman Sachs, interesting. Like I said, they're similar to Bank of America. They'll make some more money once interest rates start to tick up. We already talked about Home Depot and Lowe's, both had pretty good days. Apple's been making quite a comeback at almost $100 a share now. And Apple, I think, is an interesting one now. The iPhone 7 should be coming out pretty soon. They're ahead of their 50-day moving average. The 50-day moving average looks like probably around $96 right there, and their $20 or their 20-day moving average is about the same. So they're kind of, looks like they may have found a decent uptrend to get into. We'll see if it can break through the 200. The 200 days looks like it's still sitting at about $103.50. So it may not be able to break that 200 day, but I would expect it to continue up at least to touch the 200 day moving average, and then we'll see where it goes from there. If it can break through and hold, you may see Apple go back to $110 before it drops back down, and all that. Really, Apple's just trading on the speculation of what the new iPhone is going to do. If the iPhone 7 comes out and it's strong, then it's gonna pop. If it's not, if people aren't impressed, then it's going to go the other direction. So yesterday, I do want to point out, so I had 4 of the stocks that I'm invested in hit new highs yesterday. They were Thomson Reuters, Exelon, Coach, and Ormat Technologies. With the Coach hitting new high yesterday, that was based on an analyst upgrade, and that new high for them puts my trade in Coach. So I've been in Coach since February, since sometime in February, so about 5 months. We're up a little over 25%. I got in somewhere in the $33 range, $34 range maybe. But that puts me in a position that now, even if Coach would retrace and hit my stop losses, we're still going to come out of the trade profitably in the end. So we've got 2 in the systematic trades that are definitely running well. One is Coach, one's Agnico Eagle. A lot of the other ones are right there, doing what they're supposed to do, just kind of moving along slowly but surely, and paying the dividend in the meantime. So that's it for today, guys. If you got any questions, send me an email, chrism@campfinancial.net, or you can send me just reply on my Twitter account with a stock symbol you'd like me to take a look at. So that's it, guys. Take care, and we'll see you tomorrow.